It's more or less doubled since
Yes.
the 2008.
Yes. This is insane. And what it's doing is destroying the global faith in the dollar. Hi, this is Mike Maloney, and I've got Adam Taggart with me once again. Adam, how are you doing?
Doing great, Mike. How you doing?
Great. So, the IMF just came out with a paper titled Gold as International Reserves, a barbarous relic no more, ? A barbarous relic no more. It's interesting because Keynes wasn't taught, when Keynes came up with this phrase, barbarous relic, what he was talking about was the gold standard. That's his quote, not gold itself. So you took a look at a little bit of this, and Ronnie Stoeferle of Incrementum AG summarized it in a series of tweets. So what did you get out of this?
All right. Yeah. So Ronnie's his Twitter handle is "In Gold We Trust," which is the big report that Incrementum puts out every year. I'm going to say "In Ronnie We Trust." Thank goodness he did this tweet summarization, because the paper itself was actually pretty dry. But basically, what this report is saying is that as much as the central banks have famously sort of denigrated gold, right, calling it the gold standard, the barbarous relic, and for decades being net sellers of gold, they've actually been adding to their gold stores. So they're kind of saying one thing publicly and doing another thing privately.
Yes.
So just pulling up some of the key tweets here from Ronnie. There's one here that has a chart showing gold holdings and official reserve assets of major central banks. And you'll see here that it's increased by about 25% since the global financial crisis, right?
Right.
So, that bottom was right around the time that, Ron Paul was asking Bernanke about it, and Bernanke said, yeah, there's really no reason to have it except, tradition. Again, just sort of giving the impression that gold's meaningless in the world monetary space now. But obviously the central banks are privately singing a very different tune. You can, very clear V bottom here. So what do you think about that, Mike?
Well, this also coincides with the time that I started giving my presentations on the death of the global dollar standard, because it is coming. And lower down in Ronnie's tweets here, you'll see that there's a chart that shows some of that. That's sort of in this report from the IMF. This is one of the analysis that they get from all of this is that most of these countries are either they're developing countries, they're up and coming countries, they're not the industrialized Western societies. We are the side that has been selling off our gold. England is famous for selling off half of their gold right at the very bottom when gold hit $250 something per ounce.
Right there in the V bottom of that chart that we just showed, right? Yeah.
No, this chart is the number of ounces held. It was the year 2000, I believe, or 1999.
It was back. Oh, sorry, you're right. It was back further.
When England, so it was a V bottom in price, not ounces held by the world's central banks.
You're absolutely right. That was Brown's bottom, right, from back then.
Exactly. And so this line, if you go toward the left on this chart, it keeps on rising because we've been selling off. Central banks have been selling off gold for years. I had this chart only going up to 2007 in my book, but this does show a dramatic shift in the mentality of the world's central banks, what they're thinking. And this also has to do with emotion. Are they scared or not? And, right under this, the very next tweet says they also identified 14 countries that purchased gold and raised its share of total reserves by at least 5 percentage points over the last 2 decades, noting that all 14 were emerging market countries. So the people accumulating the most gold are the emerging markets, which, they've got large buyers and largest sellers. And, it's to see sellers on this list is just seems so incredibly, and it's all basically the West. It seems so incredibly dumb.
It does. And it's kind of surprising to see Switzerland there at the top of the list, which is sort of famous for storing gold for so many people from around the world.
Yeah. Yeah. So, and as you go down further in these tweets, you'll see that they start talking about countries where sanctions have been, financial sanctions have been imposed by the United States, United Kingdom, European Union, and Japan. And I had no idea how many countries we had placed the sanctions on, and no wonder central banks are starting to turn away from the U.S. dollar and from other currencies and more toward gold.
Exactly, Mike. Sorry, just on that point. So there were two key things I took away from this, and that was one of them, which is that these companies are watching. Well, first off, they've all gotten really beat up over the past year as the dollar just, strengthened ferociously versus their currencies, right? Yeah. So they know that they're vulnerable to big swings in the dollar, right? So part of this move to gold is just to say, hey, here's a currency we can hold our reserves in that helps us not be so subject to the vagaries of what happens with the US dollar, right? And then the second is to your point, they've been watching what the US and its allies have been doing to other countries around the world and saying, hey, wait a minute, like I might be in the US's good graces today, but who knows tomorrow, right? I don't want to be completely, subject to the type of, sanctions, embargoes, whatever, that these allies might decide to place on me. So I need some insurance against that. And gold seems to be the obvious choice for them.
Yeah, when we really started weaponizing the dollar under George Bush, and but every president since then and Congress have used the dollar more and more as a weapon, and that is one of the big nails in the coffin of the global dollar standard. And so one of these days we won't have the world's reserve currency, and we enjoy this huge advantage over the rest of the world because of it. That is going to be going away because of the abuse that our politicians have done to the US dollar, which, if you go down to his 10th tweet, there's a 4-panel chart here, and some of this is very interesting. And the first panel is geopolitical risk and economic policy uncertainty. So you've got two lines here. What I find interesting is that from 1999 until today, economic policy uncertainty around the world has been in a constant uptrend. Mm-hmm. That is dangerous. And this whole idea of fiat currencies that are basically valueless, the value that they contain is an illusion that we place on these pieces of paper. And geopolitical uncertainty makes everybody question what's going on. And you've got all these exchange rates changing, and it becomes impossible. The gold, when we used gold, there wasn't that problem. When we were on the gold standard, the problem was countries cheating gold by doing fractional reserve schemes on gold standards. And that is the reason we had economic crises under gold standards. If we had just had gold, those crises either wouldn't have been crises or they would have been very small by comparison. But then you've got geopolitical risk index, and you can see these big spikes. I think that first one is probably 9/11.
I think that one's 9/11. Yeah,
probably the invasion of Iraq. The next one is probably Syria. I didn't check these dates, but I'm just taking a guess. But look at where it's going now. This is the Putin point.
We shouldn't be laughing because this is serious stuff. But yeah, you're right. I mean, this is the third highest point in the data series.
Right. But it's a good reason for central banks and for people to be going toward gold right now. And then below that, you've got, you talked about in the last video, you showed a clip of Rick Rule, and you talked about gold being a put on the dollar, and he talked about it being insurance on the dollar. And this chart just below the geopolitical risks, the correlation of gold price and US dollar index proves it, because it's almost always, except for a few bumps here in the 90s, it's almost always negatively correlated with the dollar. So it is insurance. The negative correlations go almost to -1 means that they are the exact opposite of each other. So 0.8 is a very high correlation of being inversely correlated with the dollar. And so it is protection against inflation, against exchange rate fluctuations, and so on. What's your take on that?
Well, what's interesting about that chart is if you look at the latest data set, it looks like it's just beginning to start coming down again. And I think the reason why they became more correlated last year was because the US dollar really strengthened, like I talked about, and gold was one of the few assets to hold its own, right?
Right.
So that's why the correlation got more positive. So if it looks like it's nosing over here and it's going to start coming down, well, one of two things is going to happen. It's going to do that either because the dollar is going to get cheaper or because the gold price is going to go down. And I'm going to bet, given how stretched the dollar got last year, the odds are higher that the dollar value is going to start coming down and gold is going to start appreciating versus the dollar.
I do have to say, though, that I do believe in Brent Johnson's dollar milkshake theory. And
I do
that
too.
is one of the big things that was punishing all of the countries when the dollar was rising so rapidly. They have to accumulate dollars to pay dollar-denominated debt, and a lot of countries carry a lot of it. And when the dollar gets more expensive, it takes a whole lot more of their currency to buy a dollar. And so it was very tough on them. As the dollar goes up, it requires more and more and more of their currency. They're going to want to try to reduce their dollar exposure. And so paying down some of that dollar-denominated debt becomes very, very expensive. But Brent did say that there will come a time when the dollar and gold move together. I also believe that. So I would look for some of those spikes in this chart, like happened back in the 1990s, where it goes positive to happen sometime in the future. But it doesn't mean that gold is going down. Like you pointed out, there's two variables here. They're both moving. So, and then the next panel, this next one, countries targeted by the big four financial sanctions. I could not believe this. This is out of a total of all the countries. We had like 15% of all the countries being sanctioned. And this has risen to over a quarter. This says percent of total.
Right. And you can look at that and basically say it's more or less doubled since the 2008.
Yes. This is insane. And what it's doing is destroying the global faith in the dollar by doing this. This is that's a picture of one of the main nails in the coffin of the global dollar standard. So do you want to go on to any other tweets here from Ronnie?
Actually, we pretty much finished the tweet set. So what I would do is I just encourage folks that, find this interesting, go read Ronnie's full set of tweets there, but also go read the report itself. I think the really important thing, and it goes with the meme that I know you're going to show in just a second, Mike, as I said at the beginning, is, central banks are continuing to try to sort of send signals that they don't care about gold. But when you look at the actual data, it tells a very different story. They are definitely making a big move towards gold, led by the emerging market countries.
Yes. So, in closing this up here, before I get to the meme, I just want to show you a few things. Keynes, this article was titled "Gold as International Reserves a barbarous relic no more, ? And Keynes had referred to the gold standard as being a barbarous relic. So this is gold, $40,000 worth. This can buy you a car. You can put it in your pocket. Try and buy a car with cash. You're going to need a briefcase to carry it around. But when they put us on a gold standard, they started replacing this with these. This was a gold U.S. Treasury note from 1922. It's a large format bill. To give you an idea of the difference, here's a silver certificate that is the smaller format bill. We used to have these enormous bills, so a wallet had to be much bigger. But this is a 1935 silver certificate. And then I've got a large format silver certificate from 1923 here. And these say on them that they pay out, this is a promise to pay $1 silver. This is a promise to pay $1 silver. This one is a promise to pay a $20 gold piece. But when we replaced the real gold with these notes, that is what got the foot in the door for all of this cheating on a monetary system that was very robust and super stable. And soon we will have the new $20 bill. So I think it's great that a lot of central banks are now placing their faith in gold. And what will happen is, very shortly, they are going to be rewarded because that gold is going to be worth a whole lot more US dollars. It isn't necessarily the gold going up, it's the dollar going down, but the gold will go up in purchasing power when it's compared to stocks, bonds, real estate, and all of that. So
Agreed.
With that.
Hey, Mike, real quick before you get to the meme, I just wanted to share. So I remember, I was born in late July of 1971. So we went off, the Nixon slammed the gold window a couple of weeks after I was born, right? So I've only known the modern dollar that we have now, the completely fiat one. But I do remember as a kid going to the movie theater and my friend getting in his change a silver certificate. And we noticed, oh my gosh, this says you can hand it in for silver, right? And I don't think I saw one of those after I was like 7, which is a great example of Gresham's law, right? Which is that bad money drives out good. All of those notes that were still around were very quickly gone once we went fully fiat, right?
Right.
So, you're a little bit older than me. You might even remember seeing more in your time, but even I remember seeing the last vestiges of those before they got snapped up.
Right. Well, the U.S. dollar, people think it's been around since since the Coinage Act of 1792, but it's a different dollar. The dollar that we have today was really born August 15th, 1971. It's completely different than the dollar that was from the Bretton Woods era, 1934 to 71, which was completely different than the dollar from the birth of the Federal Reserve in they actually went into business November of 1914. The act was passed in 1913. From 1914 to 1934 was a different dollar, and then from 34 to 44 was a different dollar. Yeah, we just these fiat currencies do not last. They are just a bunch of fancy curlicues and squiggles on a piece of paper, and then we put a picture of a very well-respected dead guy on it, and for some reason, people will accept that in trade for something real. It amazes me.
Crazy world. All right. Well, look, let's get to your meme. I've distracted you.
Okay. So this is back to the central banks turning back toward gold. And this meme shows central banks and fiat is in love with the central banks, but the central banks are once again in love with gold. I want to thank everybody for watching, and we'll see you next time. Thanks, Adam.
Thanks, Mike. See you soon.
At GoldSilver.com, we have a price match guarantee, free shipping, global storage options, and phenomenal customer service. Thanks for making GoldSilver.com your bullion dealer.